Today's topic for discussion: understanding the 590 crore fraud at IDFC First Bank. What really happened in Chandigarh branch? IDFC First Bank 590 crore fraud case. Today's topic for discussion is 590 crore fraud reported by IDFC First Bank at Chandigarh branch. A discrepancy of this scale, especially involving Haryana government accounts, raise serious questions about internal control, banking oversight, and accountability. So, what exactly happened? Was this a system failure or case of internal collusion? Let's break it down in a clear and structured way. According to bank, this issue is limited to single branch in Chandigarh, and this considered as isolated incident, a one-time event, not a system-wide problem. Let's understand what exactly happened. The fraud came into light when Department of Haryana government requested the closure of its account and asked for fund to be transferred to another account. During this process, the bank noticed discrepancy mismatches between balance shown in bank's record and amount communicated by government department. Soon after, other Haryana government entities also approached the bank to close their accounts, and similar mismatch were discovered. This raised serious concern. What was the modus operandi? Modus operandi means method of carrying out the fraud. Appears to be involve a certain employees of Chandigarh branch allegedly acting in connivence, which means the secret cooperation for wrongdoing with external parties. According to bank's managing director and CEO V. Vaidyanathan, the funds were fraudulently transferred to beneficiary, people or other entities who received the money, who held accounts outside IDFC First Bank. Importantly, these were not digital system hacks. The transactions were carried out manually using forged checks, fake signed payment documents, and fraudulent authorizations letter, fake permission documentation. This means the fraud happened at branch level, not at system level. What about internal control? The bank says it has proper internal control in place. This includes maker, checker, and authorizer system, multiple level approval process, system generated statement, SMS alert, monthly balance, and confirmation. However, in case of However, in this case, it appears that internal employees and third parties work together to bypass, avoid, or override this control. Prima facie, at first look, the third party entities are also involved. Is the impact limited to one branch? Yes, the bank has clarified that the issue is uh, confined, restricted to one branch and one client group. There is no system level failure. Other branches are functioning normally. The total amount under reconciliation, verification, and mismatching of accounts is approximately rupees 590 crores. Financial impact on the bank. The bank has stated that 590 crore is the best current estimation. However, the final financial impact will depend on recoveries, money that can taken back, validation of claims, confirming exact losses, and legal proceeding, court actions. The CEO also mentioned that the bank is well capitalized, financially strong with enough reserves, and profitability is one of the positive trajectory in improving trend, supported by failing credit cost and better net interest margin, difference between interest earned and interest paid. So according to management, this loss should be manageable. Action taken by bank. Several important steps have already been taken. A police complaint has been filed. Regulator have been notified. Four employees have been suspended pending investigation. Temporary removed from duty. KPMG has been appointed. to conduct an independent forensic audit, detailed financial investigation to detect fraud. Recall requests have been sent to beneficiary banks to mark lien, legal hold or freeze on suspicious accounts. The bank has stated it will pursue strict civil and criminal action against all perpetrators, people responsible for wrongdoing, whether internal or external. They have also escalated, formally reported at higher level the matter to Board of Directors. Haryana government response. The Haryana Finance Department has taken strong action. It has de-impaneled, removed from approved list IDFC First Bank and AU Small Finance Bank for handling state government business. With immediate effect, government departments cannot park or transact funds through this bank. Additionally, new rules have been introduced. Scheme accounts can now only be opened in nationalized bank. Accounts in private bank will require prior approval from the finance department. This shows that the state government is tightening control over public funds. Conclusion. To summarize this, 590 crore discrepancy was found in Haryana government linked account at IDFC First Bank, Chandigarh branch. The fraud appears to involve branch employee and external parties. Transactions were manual using forged document. The issue is isolated to one branch. Bank has initiated investigation and legal action. The Haryana government has responded with stricter banking guidelines. This case highlights the importance of internal control, transparency, and constant monitoring in banking operations, especially when handling public funds. We will have to wait for forensic audit findings to understand the full extent of the issue. The final financial impact will depend on recoveries and legal proceedings. If you found this breakdown helpful, so do let me know your thought in comments. Do you think this was purely a branch level issue, or does it highlight deeper risk in handling public funds? Stay tuned for more structured discussion on finance, economics, and policy developments. Thank you for watching.